The market is finally starting to show strength. Bitcoin is confidently holding above 90,000. Altcoins are gradually coming back to life. ETF inflows are returning, and whales are accumulating at aggressive rates. This raises the main question. What's actually behind this move? Is it just a short-term bounce, or the beginning of something much bigger? And what should we expect next? That's exactly what we'll talk about today. Before we start, this is not financial advice. Everything I share here is my personal view and subjective assessment. Use it as an additional perspective, not a call to action. First, let's talk about Bitcoin and why it has managed to reclaim and hold levels above 90,000 over the past few days. It's important to understand one key thing right away. The market didn't bounce because of some kind of magic, or because one perfect indicator lit up. Market reversals of this scale don't work like that. What we're seeing is a combination of several factors that aligned at the same time. So let's calmly break each of them down. Let's start with the simplest, yet not so obvious factor. Last month was quite interesting because we finally saw the end of the government shutdown, and it was exactly last month that all the important financial reports were released, reports that were missing in previous months. Then things got even more interesting, the Fed chair's speech and the rate cut. Another important detail that many people missed is that the Fed is going to start buying short-term T-bills to support liquidity in the banking system. Formally, this is not QE, but the market reads it very clearly. The Fed is returning to liquidity support tools, and honestly, this is a very strong signal. All of these developments are clearly bullish. However, financial markets, especially when we talk not only about crypto but markets in general, tend to react with a delay. And it looks like that delay is now catching up to crypto, which is why we're starting to see growth. The second important factor is the behavior of ETFs and large players. This year, as soon as markets reopened, we immediately saw fairly strong inflows. It's still too early to talk about stable long-term inflows, but the start of the year looks bullish, and that's the key thing for us right now. As for large players, what have they been doing lately? They've started accumulating, and even more aggressively than before. There's a clear example where retail investors were selling their Bitcoin, while the number of large holders increased by 2.2%. And here's the key point. Sellers are not infinite. Once most short-term participants are flushed out, selling pressure starts to weaken. And that's exactly when other players step in. Those who wait for peak emotions and buy not on the first red candles, but during capitulation. There's also another, less obvious but very interesting reason why we saw weakness at the end of last year and strength at the beginning of this one. It's called a tax-driven seasonal liquidity event. When investors make profits throughout the year from stocks, securities, or their businesses, they often look for ways to reduce their tax burden. One way to do that is by selling Bitcoin or other crypto assets if they are at a loss. By realizing those losses, some investors reduced their overall tax payments. This behavior contributed to short-term selling pressure at the end of last year, but now, at the beginning of this year, we're seeing a reversal, and this could turn into a very interesting trend. First, I want to show you a potential scenario for Bitcoin over the next quarter. But before that, make sure to subscribe to the channel so you don't miss more content about the market, the latest economic news, and everything that really matters. Here I want to focus on one specific indicator that shows a very interesting pattern. Over the past few years, it has appeared 3 times, and each time it marked the beginning of a market reversal. I'm talking about RSI. RSI is not about price direction, it's about momentum. It shows how aggressively the market is rising or falling compared to the previous period. And when RSI enters deep oversold territory, it doesn't mean only down from here. It means that the downside momentum is starting to weaken. The same logic applies to overbought conditions. An extremely high RSI doesn't mean up forever. It signals exhaustion of the move. What's important is that at the end of November, we saw this signal once again. Late November was marked by extremely negative sentiment, constant talk about the end of the bull run, FUD everywhere, and Japan carried trade discussions in every comment section. And right at that moment, RSI moved into oversold territory. This fits perfectly into the historical pattern we've seen before. At the time of recording this video, around 45 days have passed since that oversold signal. Looking at previous cycles, recoveries usually started within 50 to 70 days. That means we're roughly in the middle of that window, assuming the pattern repeats. If market behavior stays consistent, the potential reversal window would be late January or early February. And if history plays out similarly, we may see not just a local bounce, but a full market recovery. And with that, the real alt season could finally begin. So, what about altcoins? The logic here is actually quite simple. Altcoins are a mirror of Bitcoin. When investors start seeing clear potential in BTC, and right now they clearly do, liquidity doesn't stop with Bitcoin alone. With a slight delay, money flows into altcoins as well. And we can already see it on the charts. XRP is up around 15% over the week, SUI about 16%, AVAX over 11%. But the most interesting part isn't even that. The strongest moves are currently in meme coins, and it's not just one or two coins. The entire sector is moving. This doesn't look like random pumps. It looks like a revival of a whole segment, where the market is once again willing to take risk and move into more speculative assets. And historically, this doesn't happen in a bear market. It happens when liquidity is returning and risk appetite is gradually increasing. That said, while altcoins are starting to look interesting, I wouldn't rush into heavy risk just yet. In the short term, we can still see pullbacks in both Bitcoin and altcoins. So let's talk about my expectations for the coming weeks. Bitcoin moved above 90,000 fairly quickly. The most important thing right now is to stay within the current range. We don't need to rush straight to 100,000. What we absolutely need is for Bitcoin not to fall below 88,000. That's our key support zone. If it fails, the door opens to a deeper correction. Personally, I expect Bitcoin to trade within this range for a while, followed by a breakout above the resistance around 94,000. From a more global perspective, I expect a very bullish year ahead. As early as next month, we could witness a market reversal, which is supported by RSI signals. On top of that, the Fed has effectively started QE, even if they don't officially call it that. And historically, this has always been a trigger for the start of a bull market. So friends, we are very, very close. All that's left is to stay patient and correctly prioritize our trading decisions. Thank you for watching. Don't forget to like the video, subscribe to the channel, leave a comment, and remember, this is not financial advice, just my personal view of the market.